Hello, and welcome to another episode of the Markets at a Glance series. So, today we'll be talking about the current events happening in the markets. And once we cover that, we'll also be doing some technical analysis to try and understand where the markets might be headed next. So, once you join in, can you say hi on the live comment section? And these will confirm that everything is working fine. So, I'll be starting with a disclaimer, and this is to tell you that the information contained in this presentation is not a recommendation to trade. It's not investment advice. So it's only purely educative. Always do your own due diligence and conduct proper risk management. So that aside, I would like to begin with the top events that are currently impacting the markets today. And once we cover that, then hopefully we jump right into technical analysis. So from the key highlights, and this is from tradingeconomics.com, you'll notice that the top news is that the euro area GDP grows more than expected. So this was an expansion of 0.3% in quarter one, the most since the third quarter of 2022, meaning that the euro area is rebounding. So we also had inflation data coming from the Eurozone. Both data showed some improvements. And if you check from the economic calendar, you'll notice the same. So the core CPI flash estimate year over year came in at 2.7%. And this was a significant drop from the previous reading of 2.9%, but also missed the expectations of 2.6%. So the overall, or the overhead CPI flash estimate came in as expected at 2.4%, same as the previous reading, showing that the overall inflation hasn't changed much from the previous month. But then the core inflation is down to 2.7%. And for those who are new, the difference between the two is that the core CPI inflation measures the change in the price of a basket of commodities with the exemption of volatile food and energy prices. So fast forward, as we approach this afternoon, we had data coming in from Canada, where the gross domestic product increased by 0.2% in the previous month. And this was a big miss from the previous reading, which was 0.5%. We expected to see 0.3, meaning that the Canadian economy is currently slowing down. So the employment cost index in the US, and this is quarter over quarter, was up 1.2% compared to the previous reading of 0.9% and the expectation of 1.0%, basically meaning that the cost of hiring people is basically moving higher. And this is indicative of a tightening labor market. So going forward, we'll be expecting more data, especially the Conference Board Consumer Confidence Survey at 5 p.m. And I believe the data for 4 p.m. should already be out. So I'm just trying to refresh here. So we have the S&P Case-Shiller Composite 20 Housing Price Index, which came in at 7.3%, meaning that the housing market is becoming hot again. And of course, the overall housing price index was up 1.2% compared to the previous drop of negative 0.1%, both indicators showing that the housing market is heating up again. So from what we are seeing in the trading charts, it shows that the market are quite relaxed. We don't have much of a movement. So I'll be trying to indicate several trends that are currently happening. And once we go through that, then hopefully we'll understand where the markets might be headed next. So now moving on to the technical analysis, I'll be starting with the major stock market indices in the US, and this is the Dow Jones, the Nasdaq, as well as the US 500. So both indicators have been moving sideways, especially since the start of the week yesterday. So you can look at the Monday price action and compare with last week, and you can see it's just sideways movement, save for the most recent movement that has just happened at 4 p.m. after showing that the real estate sector is heating up again, housing prices are moving higher, and this is not consistent with the Fed's expectations. So remember, the Fed has been looking to slow down the US economy, slow down inflation towards the 2% target in order to consider cutting interest rates. However, from what we have seen with inflation reports before, they are showing that inflation is still strong within the US, which means that the Fed is further away from achieving its targets. And this implies that the Fed might continue holding interest rates higher for longer. So as a result of the most recent news, we can see the big spike downwards, and this is the 15 minutes chart, so it's not that big of a spike. If you go to the 1 hour chart, this is the correct view. So I'm just using 15 minutes chart so that it's clear to you guys. So for the Dow Jones, a big drop. For the US Tech 100, we are also seeing a significant drop, but we have not breached yesterday's lows. Then for the S&P 500, it's a similar movement, a big drop, but we have not breached yesterday's lows. So one of the reasons we are seeing the stock market reacting this way is because the stock market has been really anticipating the rate cuts. So cutting interest rates would make things cheaper. It would ensure that Americans have more money in their pockets and they'll be able to buy more products from American companies. But now, if interest rates stay higher for longer, they continue to hurt consumer budgets, especially considering inflation is also still high. And as a result of that, you can see the market reacting negatively to a heating up housing market. So this is not a major movement. A lot of the big moves are expected to be happening tomorrow. And this is when we have the FOMC press conference. So I'll take you back to the same chart. And this is the chart regarding, to the economic calendar. So I'll take you back to the economic calendar. Then we see the events that we're expecting later in the week. So one of the big events here, and this is Wednesday, will be the ADP non-farm employment change, which is a measure from a private company showing the number of jobs created in the private sector in the US ahead of the overall number on Friday, which will be the non-farm payrolls official report. So that's a big news expected in the markets. But the most important news that investors are focusing on will be the FOMC statement, the federal funds rate, and of course the FOMC press conference. So FOMC is short for Federal Open Market Committee. So it's a committee that meets once every month, but not all months. So it's 8 meetings in a year. And once they meet, they will discuss the US economy, the economic indicators, and decide about the US monetary policy led by the Federal Reserve Chair, Jerome Powell. So there is an overall expectation that the Fed will continue holding interest rates at 5.50% without cutting or hiking. And the major focus now will shift to the FOMC press conference that will begin at 9:30 p.m. And remember, during this event, we normally see prices moving quite volatile, and it can cause a lot of volatility. So apologies for that. I need to address the noise in a second. So just give me a second, I address it. All right, thank you for your patience. Now that that has been addressed, let's continue. So from what we are seeing here, there's a likelihood that the Fed will start some volatility in the markets, leading to some major trends. So if the Fed indicates that it might continue holding rates higher for longer or even consider rate hikes towards the end of the year, then we should be seeing a much stronger dollar and much weaker equities. So that's the overall expectation, and that may explain why the markets are muted today. So that being said, I think now we can go back and try to focus on the technical analysis, knowing what we know. So on the technical analysis side, this is more of a sideways movement from Friday, Monday to Tuesday. Not much of a movement here, despite the equities making a strong rebound from here. So we had a 3-week straight correction happening in US equity indices. So SP500 made a big drop From this all-time high, we had a drop of about 6.6%, and it was the same across board. So even the Nasdaq had a big sell-off. So if you look at the all-time high, the most recent, we had 3 weeks of straight sell-off, down 8%. But then last week was pretty strong. The stocks made a very strong rebound. And now, when you consider today's events, nothing much of a volatility, we might expect these stocks to continue recovering. So remember, the FOMC and the Federal Reserve Bank of the US is not the only factor contributing to the performance of stocks. There's also a good number of earnings that are coming in, and they tend to impact the stock market much higher than the Fed. So we have seen several earnings coming in pretty strong today, especially PayPal. PayPal had a slight miss in earnings, but it beat revenue. We saw Facebook last week showing some very good performance. Google had better than expected earnings, and some of these big tech companies have very strong weights in these indices, both the Nasdaq and the SP500. So that might explain why we had a strong rally last week. But then, backed by those strong earnings, we could continue seeing the recovery in the stock markets, and these might mean that the temporary pullbacks are very important to capture these buy positions. So if this has been the bottom of the last 2 days and the market has failed to move down lower, then it might make sense to start thinking along the lines of the market rebouncing and heading higher. So on the currencies front, if you look at the US dollar index, it has been trading within this for the better part of the last 3 weeks. But now we are approaching a critical decision point where the dollar index might break the upper trend line or just remain within that. But for the better part of the day, since the market opened, the dollar index has been moving up, especially in the Asian session. The London session, for the better part, it was moving down. And now as we enter the US session, it shows more confidence that we could be moving higher. So a strong dollar index tends to impact other major currencies. So for instance, after the Bank of Japan intervened in the currency market, leading to a big volatility yesterday, and last week we had this breakout moving higher. You'll notice that there was an acceleration of about 3.52%, which was wiped out within 6 hours. So after Monday, price opened, you can see the intervention of the Bank of Japan. Price went down 3.5%. And since then, you can see that price has been attempting to move higher. And today, the dollar has been pretty strong against the yen, and this trend keeps continuing. So one disclaimer, if you are trading the USD yen, then you should be extremely careful. The Bank of Japan could as well intervene at any given time. So if you are holding buy positions, make sure that you are applying tight stops so that you don't get kicked out in such a big move. So that's my advice if you're trading the USD JPY currency pair. As for now, it seems more likely that it will continue moving higher. So for Euro USD, I remember drawing this yesterday, and you can see that the momentum is now turning into what is likely looking like a diamond formation. So for those who don't know a diamond formation, it's two trend lines that are moving in the opposite direction, and then the instant range in the opposite direction for both of them. So what we normally see in a diamond formation is a market forming higher highs and lower lows, and then immediately changing to lower highs and higher lows. So in this case, it's often an indication of weakness in a trend, often indicating that the trend may be changing. So this bullish momentum in the euro against the dollar could be coming to an end, and then you see the dollar strengthening against the euro, and the key identification point would be if it breaks this lower trend line. So in this case, if the market eventually breaches this trend line and starts trading lower, then it would present nice short selling opportunities. So for the pound USD, we had seen this bullish momentum. We speculated the market to find resistance in this area here. So it was an area of resistance. And after the market got to this area, notice that it changed direction and started moving downwards. And this is in coordination with what we have seen with the dollar index being pretty strong, and now the pound taking some steps backwards. So in this case, we could continue seeing this momentum for the day. That is the pound losing to the strong dollar. So I'll be observant of how this current green candlestick closes at the top of the hour. So if it closes near the open, then I would expect the bearish momentum to continue. So for New Zealand USD, we've had a very nice trend line forming along this path here. So the activities of the past couple of hours have been pretty clear that the market broke the trend line, pulled back, and now continued, which is basically an indication of a major change in the trend direction. So in this case, the change is towards the lower side. So now I expect to see some further bearish momentum. Potentially, the market now headed to this bottom here, and this is around 0.58586. For USD trading against the Swiss franc, we have had this area that has been a very strong resistance point. So there has been several times we have seen the market bounce off this resistance of 0.91511. And in my latest presentation, I think this was last week, Friday, we identified these as a very strong rejection price. It was last week on Thursday. Then yesterday on Monday, we identified this as a strong rejection point, and we expected price to drop to this area. So notice that price dropped all the way to our target around 0.90863 and immediately bounced as the dollar regained strength. And now, for the first time in a long time, we are bound to see a breakout happening here. So if the breakout eventually happens, then it's a case or a basis to go for a buy position, trading the breakout towards the upper side. So as for the dollar, trading against the dollar, we are seeing a major resistance being tested here. So if there's a clean break, then we continue moving higher. So potentially, we could be looking at the market making a rally or around 1.38. So as for gold, notice, as yesterday we had a weaker dollar, we saw gold bouncing from here. We expected the price to hit the previous high around this area here. The strength was not strong enough, so price started changing direction and now dropping. And now we are on the verge of completing this move where the price eventually drops to the previous low. And this is a price level of 22.91. This is where the price bounced in the previous time. So this strong bearish momentum could extend to this level. So we have already covered the US equity indices. Notice they are weakening, but then we don't have evidence of the market bouncing strongly. So it's safe to assume that they will continue weakening after the 3-day movement sideways. So Brent oil had a good movement early in the morning, but then that movement did not extend as projected. So the projections of the market would go for the previous high are now out of the focus. So after breaking the trend line earlier yesterday, notice that the market pulled back to retest the trend line. And now the current candlestick is indicating a strong burst of momentum downwards. So we could be seeing some further weakness in Brent oil prices in the New York session. So gold, we had analyzed that the price might bounce off this area here, around 60,640. So remember that the Hong Kong spot Bitcoin ETF started trading today. We didn't have much volume. The expected volume was between 100 and 300 million, but it barely got to 20 million. So that led to a big sell-off later in the day. And this big sell-off is expected to at least touch around 60,640. So at this point or at this level, it doesn't make sense to be looking for sells. It makes sense to be observing for signs of bullish entry. So once you see evidence of buyers entering the market, then that might be the case. So a good example of evidence of buyers entering the market is often a candlestick like this one. So I'll try and zoom, see if you guys can identify it. So a green candlestick with a long tail towards the lower side, indicating rejection of lower prices and buyers entering the market, which can often lead to a big price acceleration such as this one, which would make more sense for a trader who is looking to swing trade that position. So then for European equity indices, they seem to be weakening. So after failing to form a high here, this was yesterday, notice how there was a big sell-off and now a continuation of the same. And of course, the immediate target seems to be a price level of 48.98 for the Euro stocks. Notice the number of times price bounced from this area, and now price could be headed back to the same level. So the French 40 index are also strongly bearish after failing to go into a new high. So from the 1 hour chart, you can notice that it also failed to form a new high. And after failing to form that, now we are headed to the previous low. So around this price level of 7,962. So Chinese equity indices have been pretty strong. If you look at the daily chart, they have broken a clear 1 year trend. And now they have been moving up strongly. So if you look at the number of days, we have seen a strong bullish momentum. This is 6 consecutive days. So today is the first day we are seeing prices pulling back downwards, but then I believe the momentum is still there. So a pullback might be an opportunity to start looking for bullish momentum. So it's the same thing as the China A50 cash index. So from the daily chart, this is how it looks like. So we already have this breakout happening. But then after the breakout, you can see that now price is pulling back downwards. So it's time to be patient and look for more positions to squeeze the upside strategy. So that's it for the day. I'll be checking to see if you guys have raised any questions. Of course, one more important asset is Tesla. So Tesla was down about 42% year to date. But then after dropping that much, from last week, we have seen a very strong rebound in Tesla shares, and the rebound can be seen from here. So right from the lowest price that we have seen in the last week, the price has really gone up by about 40%. So this strong rally has happened within a period of 1 week, and yet alone, you'll notice that the price acceleration was quite significant. So opening up with a big gap towards the upside, and closing here, the stock was up over 15%. So this follows a surprise visit by Elon Musk to China, where he is organizing for full self-driving software to be approved in China, and that would expand Tesla's revenues in China. And remember, China is the second biggest market for Tesla, right after the US, and there's a good chance that he'll get the deal going through. So that and many other developments in Tesla are raising momentum. And after the 42% sell-off earlier in the year, we are seeing a very strong recovery. And now Tesla is just about 23% down year to date. So Tesla stock tends to be quite volatile. And once it starts making these big moves, they can happen within a very short period of time. So in this case, after the market opens, I expect to see some further momentum in this bullish trajectory. And it could be a chance for you to consider maybe diversifying your trading approach by considering some fast-moving stocks. So far, I haven't seen a single comment. So thank you very much, guys. Thank you for your time. So if you're new to trading, check out the Novice to Pro series available on FX Pesa YouTube. And of course, if you are just starting, make sure to open a trading account from the links below. If you have been following these sessions for a while, make sure to follow the sessions every day at 11 a.m., where we cover the market snapshots, show you the market updates for the day, technical analysis, and potentially we might identify trading opportunities here and there. So thank you very much, guys, and I hope to see you on the next session.